Today's video takes a deep dive into AMC's upcoming earnings, recent market moves, and the intensifying actions of short sellers attempting to bring AMC's value down. As we approach the third quarter earnings release, there's a lot of anticipation and analysis to consider. So let's break down everything on the horizon for AMC. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But everyone, remember this is not a financial advice video. Let's start by marking our calendars. AMC is set to release its Q3 2024 earnings after trading hours on November 6th. Meanwhile, we'll also see other significant updates from industry players like National Cinemedia, which will report earnings on November 5th after hours, IMAX on October 30th after hours, and Cinemark on October 31st before the market opens. AMC's announcement comes later than these other three, which gives us a chance to observe and compare. This sequence is helpful because both IMAX and Cinemark provide points of reference for assessing AMC's performance, especially in light of past results. In the previous quarter, AMC's Q2 results didn't exactly meet consensus predictions, which fueled criticism. Interestingly, IMAX had revised its own consensus to achieve favorable comparisons, creating an impression that it outperformed AMC. However, a deeper look at the numbers shows that AMC had robust results, arguably even surpassing IMAX. This comparative lens is why we're paying close attention to how AMC positions itself relative to these competitors in the next earnings period, providing us valuable insights into the company's market standing and financial health. As we move through Q4, the box office performance to date is solid and only $9 million shy of 2023 figures. Although Q3 results are our main focus, we can already infer that Q4 will likely continue to show resilience. AMC's CEO Adam Aron has previously explained that AMC doesn't necessarily need box office revenues to return to historical highs to maintain profitability. Thanks to operational adjustments, AMC has reached a point where they're positioned to generate profits even if box office numbers remain below pre-pandemic levels. For example, AMC's record-setting EBITDA in June demonstrates the impact of streamlined operations on their profitability. Looking at Q3 and into Q4, AMC seems poised for strong results, and the company appears well prepared to capitalize on increased box office revenue if and when it occurs. With these strategic operational efficiencies in place, AMC has established a pathway to generate more income with less dependency on box office peaks. This confidence reassures investors and supports AMC's long-term growth prospects, reinforcing its resilience against market fluctuations. Observing this momentum, we can expect AMC's Q3 to indicate positive performance, and with Q4 numbers already looking promising, the company remains in a stable position to withstand economic or market-related pressures. Shifting gears, let's examine the activity among short sellers targeting AMC. One recent development in the ongoing battle is the launch of the Granite Shares 1X Short AMC Daily ETF. This specific exchange-traded fund ETF is designed to profit when AMC's stock declines, effectively giving investors a means to bet against the company's success. The creation of this ETF raises questions, especially given AMC's fundamental strength and relatively low volatility compared to companies typically targeted for shorting. The introduction of an ETF explicitly aimed at shorting AMC is a stark illustration of the opposition AMC faces from those hoping to see its value decline. The underlying motivation here appears to be desperation on the part of short sellers who have exhausted other options to borrow AMC shares in the open market. Instead of obtaining shares outright, they turn to the Granite Shares ETF, which lets them engage in short positions without needing to borrow shares directly. By doing so, hedge funds involved with Granite Shares ETF avoid the cost and limitations of direct borrowing. They have started relying on complex financial products like swaps and futures contracts. This tactic shows the extent to which AMC's detractors are willing to push to maintain their positions as they seek to exert additional downward pressure on AMC. We've discussed this topic previously, noting the variety of loopholes and strategies shorts use to influence AMC's stock price. From failed-to-deliver trades, FTDs, to swaps, and even cryptocurrencies, we see a broad array of financial maneuvers aimed at suppressing AMC. The Granite Shares ETF represents just one more attempt to manipulate market forces, adding to a long list of actions employed to keep AMC's price from rising. An intriguing aspect of the short-selling sector is that it's generally characterized by fierce competition and a degree of mistrust among players. Typically, these firms are highly competitive and have little incentive to cooperate, given that their business largely revolves around challenging corporate entities and navigating financial controversies. Yet, despite this lack of solidarity, we're now witnessing something unusual. Short sellers who are generally rivals are aligning themselves against AMC and GameStop. This collaboration suggests that there's a shared interest among these firms in keeping AMC's price under control, potentially because they stand to gain more by working together than by competing in this particular case. This rare cooperation in the short-selling industry could signal a turning point, especially given the competitive and high-stakes nature of their operations. It appears that these players recognize the benefits of collaborating on AMC, as failing to do so could result in significant losses. Still, if a financial strain like a margin call or liquidity crisis were to arise, this alliance would likely crumble, with each firm looking out for itself. That breakdown could trigger a domino effect, impacting all participants who are heavily shorting AMC. Retail investors, on the other hand, remain unified in their commitment to supporting AMC and countering the efforts of short sellers. Unlike short sellers who may quickly abandon each other at the first sign of trouble, retail investors have created a steadfast community around AMC. As we look forward, any weakening in the alliance of short sellers could result in the very volatility and market shift they seek to prevent. Broader economic issues also come into play when we consider AMC's position. There's a potential for economic disruptions that could shake up the market. The United States has previously defaulted on its debt 4 times, and some analysts suggest a 5th default could be on the horizon. Such an event would have extensive implications, not only for individual stocks, but for the entire market and economy. Given that $7.6 trillion in Treasury notes is set for renewal within the next several weeks, the rising debt burden is becoming increasingly concerning, impacting interest rates for mortgages, auto loans, and credit cards alike. Market analysts have already observed warning signs of financial strain across numerous sectors, from institutional investors to banks, as cash availability tightens and investment risks increase. For companies like AMC, these macroeconomic factors contribute to a complex financial environment, with shifts in liquidity and borrowing costs potentially impacting operations across industries. Such an interconnected financial landscape underscores the vulnerability of those over-leveraging themselves, especially in the short-selling sector, which relies on the continued availability of funds to hold and expand their positions. Shifting to a familiar figure, we find Keith Gill, popularly known as Roaring Kitty, an influential figure in the GameStop GME movement. Recent reports indicate that Roaring Kitty no longer holds any ownership in Chewy, following a recent 13F filing. This is notable to AMC investors since some speculate that Roaring Kitty has shifted his focus back to GameStop and potentially even AMC. While this doesn't guarantee a price squeeze, Roaring Kitty's attention to these stocks tends to bring new waves of interest from retail investors. The prospect of Roaring Kitty taking a position in AMC or GameStop generates curiosity and concern among short sellers, given his historical impact on retail-driven momentum in these stocks. We have seen that when Roaring Kitty takes an interest, the resulting market activity can bring volatility and an influx of new investors. Overall, we find ourselves on the cusp of potentially significant market shifts. With AMC's continued operational improvements, looming short-selling challenges, and the backdrop of economic uncertainty, the months ahead may bring considerable change. The evolving landscape includes retail investors, institutional maneuvers, and broader economic forces, all converging in a way that could reshape the dynamics surrounding AMC. And as AMC persists, it provides retail investors with a stronghold in an otherwise turbulent market. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.